Hey everybody, Ben and Steven here with Integrated Wealth. Just wanted to drop a quick market minute and talk about some of the volatility that we're seeing in the market. Some of you might be concerned. Obviously, it seems like every year we go through something like this. And we just wanted to shoot you a quick video to kind of talk about what we're doing here on our end or what we're not doing on our end. If you think about almost a year ago, we had the tariffs, right? The Liberation Day, where the market all of a sudden dropped 3, 4, 5% in one day after a few days. And it was a ton of volatility. Actually, it was quite scary. It kind of reminded me of COVID when the market just kept dropping and dropping for a full solid month. Some of you are asking the question is, what are we doing behind the scenes to alter maybe your investment strategy? One thing I do want to keep in mind is markets do go up and down. We know that, right? So we don't want to make any rash decisions and change investment strategy and change how we're making your investments, etc. Because just as the market go down, it can come right back up, right? Now, we don't know how long this is going to last. We know volatility is here. It's probably going to be here for a little bit. But Stephen wants to talk about some things we are looking at on our end that'll give you some peace and give you some confidence moving forward.
Yeah. So one of the things that we really like to say as part of our job description is taking all the noise that we hear, whether it just be in the media or taking a look at your portfolio and seeing different changes and things that are happening in there between the different sectors, and translating that into how can we do things that are actionable and that are going to impact you, whether you're retired, whether you're on the cusp of retirement, or whether you're several years away. We want to make sure that we're being very proactive in a lot of these things, but also very aware that, as Ben said, when the market does move, we've anticipated this and we're ready for this. And so we like this chart behind us. What this is it breaks down the difference between exciting markets and boring markets. Now, when I say exciting, I don't always mean positive and good. Like we see out here, this green here on the left-hand side for you, we see when the market has dropped more than 10% in any given year. In the middle here, we have dropping anywhere down 10% to up 10%. And on the far right-hand side here, we're talking about really good, exciting markets when we're seeing a lot of positivity and growth. And so many times when we just listen to the news or we just kind of read the headlines, whenever I get out of a meeting, I have about 20 breaking news alerts. We're able to see how fast these things shift. Think about last year. Think about when the market went down in April and how scary that was for just a season, yet we ended 18+% within the S&P 500. And so it's important to recognize when we're just looking statistically at what's happened over the years and ultimately how a lot of the years finish. And so we have 51 up markets that have made more than 10% since the life of the stock market. Within the middle here, we have 25 boring markets. And over here, just 11 extreme down markets. Basically, what this comes down to is we see positive markets 72% of the time. Now, that doesn't mean there isn't room to take advantage of different things whenever volatility is happening. So one thing that we always like to talk about, we talked about this last year around the same time, Roth conversions. Now, most of the time, we like to wait until the end of the year to do these Roth conversions because we don't exactly know your entire tax picture until the end of the year. But when the market is down a little bit, sometimes it makes sense to say, hey, let's sell whenever we're paying a little bit of less taxes, moved over into the Roth, and inevitably, as we see statistically what happens as the market comes back, that's coming back in a tax-free environment. Secondly, something that we're really going to be talking about this year a lot, now the market's been great, and a lot of you have been able to see that within your portfolios. If you're somebody who holds a large non-qualified portfolio, meaning a trust, individual account, TOD, a joint account, there's probably going to be a lot of capital gains within there. When we do see market volatility and swings like this, it could mean that we can do some tax loss harvesting where we peel off some of the gains and offset it with some of the losses. That's something that's really good. Get rid of those handcuffs and move into something that might be more modern, and something that's better positioned for the future ahead. Lastly, something we want to talk about, just as interest rates are coming down, is we do want to think about ways to get really good yields. Now that money markets are down to 3 to 3.5%, CDs maybe 3.7%, maybe a little bit lower than that. There's a lot of opportunity for that, a lot of cash on the sidelines that's acted as dry gunpowder over the past few years. We want to get that working, get that implemented, and now's a perfect time to do it.
Yeah, and I want to finish on, everybody that comes to our office, and we take pride in this, is making sure everybody has a plan for retirement. And so when we talk each and every year and go through reviews with all of you, we want to make sure you are allocated and positioned the best possible way. Obviously, none of us can control the market, but most of us here have somewhat a part of our portfolio that is safeguarded from any kind of market losses, which is very important in times like this. We use those buckets a lot of times for income, but also for foundation, that where we can't lose anything. So when times like this, be rest assured, we try to allocate you and position you to, we call it all-weather type portfolio, where we know the dips and the valleys are going to come in the market with obviously lots of gains. But we have that in mind. So we're looking forward to catching up with you with the rest of the year here, and just want to thank you so much for working with Integrated Wealth. Have a great week.